You know what terrifies me more than a market crash or a recession announcement? Watching good, hardworking people spend their entire lives playing a game they never understood in the first place. And right now in Britain, we are standing at one of those rare moments in history where everything we thought we knew about money is about to be tested in ways most people cannot even imagine. Let me ask you something. Have you ever noticed how some families seem to accumulate wealth generation after generation, while others work twice as hard yet barely keep their heads above water? This is not about luck, and it is definitely not about who works harder. What separates these two groups is something far more fundamental, and today we are going to pull back the curtain on a truth that could change everything you think you know about protecting your money. Ray Dalio spent decades studying economic patterns, and he discovered something remarkable. The economy does not move randomly. It moves in cycles, predictable repeating patterns that have played out over centuries. Right now, we are approaching a phase that Dalio calls a paradigm shift. These do not happen often, maybe 3 or 4 times in a lifetime, but when they do, the wealth map gets completely redrawn, and the people who see it coming position themselves to win, while everyone else gets left behind wondering what happened. Think about it like this. Imagine you are on a beach and everyone around you is building sandcastles closer and closer to the water because the tide has been out for so long that people have forgotten it even exists. You see children playing, families laughing. Everyone assumes tomorrow will look exactly like today. But you notice something. Small waves starting to creep in, the wind shifting direction. You have studied tides before, so you recognize the pattern. You move your belongings higher up the beach. You warn a few people, but most just smile and keep building. After all, the sun is shining and the water is still far away. We are at that exact moment right now with the British pound and the global financial system. The tide has been out for so long that an entire generation has grown up never experiencing what happens when it comes rushing back in. But the signs are already here if you know where to look. Silver is not just moving. It is screaming a warning that something fundamental is changing beneath the surface. Now let me be clear about something. I am not here to scare you. Fear paralyzes people, and paralyzed people make terrible decisions. What I want to give you instead is clarity, understanding, the kind of insight that allows you to see what is coming and position yourself accordingly. Because here is the truth that nobody wants to tell you. The greatest transfers of wealth do not happen during the good times. They happen during transitions, during those moments when the rules change and most people are still playing by the old playbook. Dalio talks about debt cycles and how governments eventually face impossible choices. You can see this playing out right now. Our government is drowning in debt. Interest payments are consuming more and more of the budget. Meanwhile, inflation is eating away at your purchasing power every single day. You go to Tesco or Sainsbury's and you can feel it. That same shop that cost 50 quid 2 years ago now costs 70. Your salary might have gone up a bit, but nowhere near enough to keep pace. So what do governments do when they are trapped like this? They have only a few options, and history shows us they always choose the same path. They print more money. They devalue the currency. They inflate away the debt. It is the political path of least resistance because most people do not understand what is happening until it is too late. They just feel poorer and angrier, but they cannot quite put their finger on why. This is where silver comes into the picture and why what is happening right now matters so much. For thousands of years, precious metals have been the canary in the coal mine. When a confidence in paper currency starts to crack, smart money flows into tangible assets. real things you can hold, things that cannot be printed into existence by a government desperate to solve short-term problems. Silver right now is doing something it has not done in decades. And if you understand what this signal means, you will be miles ahead of the crowd when reality finally catches up with perception. Let me paint you a picture of how this works, because once you see the pattern, you cannot unsee it. Go back to 1971. Britain was facing a currency crisis. The pound was under tremendous pressure. Inflation was rising. The government had overspent for years funding programs they could not afford. Sound familiar? What happened next changed everything. The entire global monetary system that had been based on gold collapsed. Countries were forced to let their currencies float freely, and for the next decade, people who held paper money watched their wealth evaporate, while those who owned real assets like property and precious metals saw their purchasing power protected and even multiply. Now here is what most people miss about that period. The warning signs were there years before the crisis hit. Gold and silver started moving first, not dramatically, not in a way that made headlines, just a steady, persistent climb that told anyone paying attention that something was fundamentally wrong with the system. By the time the general public woke up and started scrambling to protect themselves, the easy gains were already gone and prices had shot through the roof. We are seeing that same pattern today, except this time the stakes are even higher. The debt levels are astronomical compared to the 70s. The Bank of England has painted itself into a corner. They kept interest rates artificially low for over a decade, and now they are trapped. Raise rates too much, and they crash the economy and make government debt payments impossible. Keep rates low, and inflation runs wild, destroying your savings and your purchasing power. There is no good option left. Only varying degrees of pain. Silver has already started reacting to this reality. While most people are still watching the stock market or obsessing over property prices, silver has been quietly building momentum. Smart institutional investors are positioning themselves. Central banks in countries that understand these cycles are accumulating precious metals at rates we have not seen in generations. They know what is coming, even if they will never say it out loud. Let me share something Ray Dalio taught me that changed my entire approach to money. He said you have to think in probabilities, not certainties. You cannot predict exactly when something will happen, but you can identify when conditions are ripe for major change. Right now, the conditions are not just ripe. They are screaming at us. We have unsustainable debt. We have political leaders who refuse to make hard choices. We have a central bank running out of tools. We have a public that has been lulled into complacency by years of relative stability. Think about the average British family right now. They have most of their wealth tied up in their home, maybe some money in a pension they do not really understand, perhaps a bit in a savings account earning interest that does not even come close to matching inflation. They are doing exactly what they have been told to do. Work hard, save money, trust the system. But what happens when the system itself is the problem? I want you to imagine two people, Sarah and James. Both earn the same salary. Both work equally hard. In 2020, Sarah started noticing the signs we are talking about today. She educated herself about monetary history. She learned about debt cycles. She started gradually moving a portion of her savings into assets that hold value when currencies weaken. Not everything, just enough to protect herself if things went sideways. James, on the other hand, kept doing what he had always done. He trusted that the government and the Bank of England had everything under control. He left his money in the bank earning next to nothing while inflation quietly eroded its value. Fast forward to today. Sarah has not just protected her wealth, She has actually increased her purchasing power while everyone around her feels poorer. James is frustrated and angry. He worked just as hard, but somehow he fell behind. The difference was not effort, it was understanding. It was seeing the machine for what it really is and positioning accordingly. Now I know what some of you are thinking. This sounds dramatic, maybe even a bit extreme. Surely things cannot be that bad. The pound has been around forever. Britain is a stable country. The system has always worked itself out before. And you are right to be skeptical. Healthy skepticism is good. But let me ask you this. Do you remember 2008? Do you remember how quickly everything fell apart? Do you remember the banks that were too big to fail suddenly needing government bailouts funded by your tax money? The people who saw 2008 coming were not psychics. They were not lucky. They simply understood the patterns. They saw unsustainable debt levels. They saw reckless lending. They saw warning signs that everyone else ignored because acknowledging them would have been inconvenient. And when the crisis hit, those people were prepared, while millions of others lost their jobs, their homes, and their life savings. History does not repeat itself exactly, but it absolutely rhymes. The melody might be slightly different each time, but the underlying rhythm stays the same. Governments overspend. Central banks print money. Currencies lose value. People who understand this protect themselves. People who do not get wiped out. It has happened in Weimar Germany. It has happened in Zimbabwe. It has happened in Argentina. It has happened in Venezuela. And yes, it has happened in Britain before, and it can happen again. But here is the empowering part of this message. You do not need to be a financial genius to protect yourself. You do not need insider connections or a fortune to get started. What you need is awareness and the willingness to act on what you know, even when everyone around you thinks you are being overly cautious. Ray Dalio built his entire investment philosophy on one simple principle: diversification. Do not put all your eggs in one basket, especially when that basket is controlled by people with every incentive to protect the system rather than your individual wealth. Let me break down what this actually means in practical terms. Your pounds sitting in a bank account are nothing more than a promise, a digital entry that says the government will honor this as payment for goods and services. That promise is only as good as the government's ability to maintain confidence in the currency. When that confidence starts to crack, and it always does eventually, the value of those promises erodes. Not overnight, not in a dramatic crash that makes headlines. Usually it happens slowly, then suddenly. Like going bankrupt, as Hemingway said, gradually, then all at once. Silver and gold have been money for 5,000 years. They have survived every empire, every currency crisis, every government that tried to print its way out of trouble. They cannot be created out of thin air. They cannot be devalued by political decree. They are finite, tangible, real. When people lose faith in paper promises, they return to what has always held value. This is not speculation. This is historical fact. Right now, silver is particularly interesting, and here is why. The gold to silver ratio tells us how many ounces of silver it takes to buy 1 ounce of gold. Historically, this ratio has averaged somewhere between 15 and 30 to 1. At various points in the last few years, this ratio has exceeded 80 to 1, meaning silver was dramatically undervalued compared to gold. When ratios get that far out of balance, they eventually snap back. Not because of manipulation or conspiracy, but because the fundamentals reassert themselves. Markets might be irrational in the short term, but they are surprisingly rational over longer periods. Beyond the monetary aspect, silver has something gold does not: industrial demand. Silver is critical for solar panels, electric vehicles, electronics, and countless technologies that are only growing more important. There is actual consumption happening, real demand beyond just investment and monetary use. This creates a floor under the price that did not exist in previous generations. So you have monetary demand increasing as people lose faith in currencies, and you have industrial demand increasing as technology advances. Supply, meanwhile, is relatively constrained. That is a recipe for significant price appreciation over time. Now I want to address something important because I can already hear the objections forming in your mind. Some of you are thinking this sounds like fear-mongering, like someone trying to sell you something. Let me be direct with you. I am not selling silver. I am not a dealer. I have no financial interest in whether you buy precious metals or not. What I am trying to do is share a framework for understanding what is happening in the economy right now, because I genuinely believe most people are sleepwalking toward a cliff. The media is not going to warn you. They are too busy covering political theater and celebrity gossip. Your bank is not going to warn you. They profit from you leaving money in low-interest accounts. The government is definitely not going to warn you because acknowledging the problem would require admitting decades of mismanagement. So who is going to tell you? People like me who have studied these patterns and understand what comes next. People who remember that every single time in history, when debt levels reached these extremes, the outcome was the same: currency devaluation, wealth destruction for the unprepared, wealth preservation and creation for those who position themselves correctly. Think about what Ray Dalio did in 2008. While everyone else was panicking, he was calm. Why? Because he had studied debt cycles. He knew the signs. He had positioned his portfolio accordingly. He did not have a crystal ball. He just understood the machine. And that understanding allowed him to not only survive, but thrive during one of the worst financial crises in modern history. That same opportunity exists right now for anyone willing to open their eyes and see what is actually happening. Here is what I want you to take away from this. You have a choice right now that most people do not even realize they have. You can continue doing what you have always done. Keep your money in the bank. Trust that the system will sort itself out. Hope that your pension will be there when you need it. Or you can take responsibility for your own financial future. You can educate yourself. You can diversify into assets that have protected wealth through every crisis in human history. You can be the person who sees the tide coming in and moves to higher ground. This is not about getting rich quick. This is about preserving what you have worked your entire life to build. It is about making sure that 20 years from now, you can still afford the same quality of life you have today. It is about protecting your family from the consequences of decisions made by politicians and central bankers who will never be held accountable for the destruction they caused. Start small if you need to. You do not have to go all in tomorrow. Take 10% of your savings and convert it into something real. Silver, gold, assets that cannot be printed. Then educate yourself further. Read about the Weimar Republic. Study what happened in the 1970s. Understand the patterns, because once you see them, you will never look at money the same way again. You will understand that cash is not safety. It is risk. The risk that the people controlling the printing press will make decisions that benefit them at your expense. The precedent that could break the pound is not some future event we are worried about. It is happening right now. The debt is already unsustainable. The political will to fix it does not exist. The central bank has already lost control. Silver has already reacted because silver always reacts first. The only question is whether you will react in time or whether you will be part of the crowd that wakes up too late and spends the next decade wondering what happened to their wealth. Ray Dalio often says that the biggest risk is not taking enough risk. What he means is that playing it safe when the game itself is rigged is the riskiest thing you can possibly do. True safety comes from understanding reality as it is not as you wish it to be. It comes from positioning yourself ahead of the crowd. It comes from making uncomfortable decisions today that your future self will thank you for. So I will leave you with this. The storm is coming. The warning signs are everywhere. Silver is already moving. The question is not whether change is coming. The question is whether you will be ready when it arrives. Will you be the farmer who prepared or the one who kept building on the beach? The choice is yours, but the window to choose is closing faster than most people realize. Everything I have shared with you today is based on historical patterns, economic reality, and the principles that have guided the wealthiest and most successful investors through every crisis. The information is out there. The opportunity is in front of you. What you do with it will determine your financial future for decades to come. The time to act is now.